Stocks plummeted today. The Dow had its worst day since 2020. Nasdaq was down 4.75%. So why did this happen? Everyone wants to be able to say it was this, it was that. Guys, remember, yesterday we had a big up day. Everything was rosy. Oh my God, look at the good news out there. Now all of a sudden, bad day, stocks plummeting. Look at this, guys. Look at this. 3.5% for the Dow, 4% for the S&P, 4.7% for the Nasdaq. How does that happen on the tail of big days? Guys, this is the market's uncertainty. This is where we are right now in the entire cycle. I've done this before. This is where markets go. Bull, 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 bull. Oh my God, things are falling. Nope, we were wrong. And then boom. And I said before, I think we're somewhere in here. I still believe that. I make my decisions when I look at the market in the future. I don't try to guess what's going to happen today, tomorrow, next month, What I try to worry about is long term. Long term, this market is stuck at very, very high valuations relative to history. We are off the highest valuations of history on many metrics. But guys, good news for you. If you're out there and you're just dollar cost averaging, here is what the market's going to do over time. The value of the market's going to go up like this. But here's what the market's actually going to do. That is why it's imperative that you don't worry about days like today. Don't worry about them. Sit there, and this is all part of a long-term plan. Your goal is to buy every single month, every single quarter, every single week, whatever the number is, over and over. And sometimes you're going to overpay, and sometimes you're going to underpay. And that's okay. That's actually going to make you do better than 99% of the professionals out there. Everyone thinks they can beat the market. Very few people can, because what they do is they end up buying a ton here and selling here. This is human nature. When you see the price of your stocks go down, you get worried. Don't be worried. If you have good companies, or more importantly, if you invest in SPY, VOO, or some other low-cost index fund that follows the S&P, you're going to beat 82% of actively managed mutual funds on a yearly basis. And over a 10 or 20-year period, you're going to beat 99% of them. You can do that. All it takes is the internal discipline of saying, wait. If I look back at history, back in October of 1987 was the worst day in history. The market fell 25%, 27%, something like that. Guess what happened? The market rebounded eventually, and it went back up, and we had record highs. That's what always happens. Don't focus too much on day-to-day reactions, because like I showed you, look what's happened this year, guys. I just want to show you what's happened in the last year, in the year-to-date in the stock market. This is the Nasdaq. This is the S&P right here. Let's go to the S&P year to date. We're going to look at percentage change. Guys, we went from even, down 9%, back to down 4.5%, back to down 12%, back to down maybe 3%. It goes up and down. But your goal is to worry about the long run. Let's look at the long run of the S&P. This is the long run going back to 1970 something. 5,000%. We peaked at. Guys, 9/11, financial crisis, COVID, and guess what? Stocks went up. This was that 20% drop in the S&P in one day is right there. Do you even see this blip? Do you even see this? It's a little blip. It's nothing. Your focus is the long run. If you're trying to retire in the next 3, 4, 5 years, I would meet with somebody that can explain to you the benefits of altering your components of your investment portfolio. If you are sub 50 and have 15, 20, 30 years left of savings and investing, relax. Don't worry. Don't listen to those other YouTube hypesters who all tell you to put all your money on Palantir, Peloton, and all these stupid stocks that go nowhere because they're overpriced. In the short run, the stocks are a voting machine. In the long run, they're a weighing machine. Just keep sticking to the plan of VOO, SPY, month in, month out, and I guarantee you, you will beat the vast majority of actively managed mutual funds. Don't waste your money on financial planners who are going to charge you fee after fee after fee and move your money in and out. The best thing for financial moves is less moves. Make less changes, you will do better over the long haul. Find good quality stocks at good prices if you want to pick individual companies. So guys, S&P, the biggest gainer was TJ Maxx. The biggest loser was Target. Two retail companies. So it was funny to me. I see the articles today saying Target and TJ Maxx are both retail. but they're complete opposites. Even more importantly, look at Tesla. This is how I know we're at a turning point in the market. I read an article today on Barron's that said Tesla's profit and revenue potential is greater than they thought, but analysts are decreasing their price estimates. Think about that for 5 seconds. Tesla's going to do better than everybody thought, but they decreased the price estimates. And I was called the crazy one for thinking Tesla's overpriced. Guys, what you have to look at is value versus what you're paying. And with Tesla, they're going to do better than people expected, and people are still lowering it. Why? Recency bias. What did Tesla do today? Let's look at what Tesla did today. Tesla lost 6.8% today. $52 went down to $7.09 or whatever. Why? They're expected to do better than was originally thought, but yet they got downgraded. Look at Target. Target missed. Walmart missed. Target lost 25% of its value in one day because of missing estimates. Yeah, I get it. They might have missed. I don't care if they made zero money last quarter. 25% of its value, that tells me there's a disconnect somewhere in the market. Either Target's way overpriced or people are just emotionally crazy and they're just selling big time to get rid of the stock. Or it's both. How can, by the way, TJ Maxx beat on profit, did not beat on revenue. They didn't get as much revenue as they thought they were going to get. And TJ Maxx was up 7-8% today. Do you understand? If this is confusing you, it should confuse you. It makes no sense. Don't fight that confusion. That confusion is exactly what you need to be paying attention to, because that tells you something doesn't make sense here. I need to learn more. That's why you watch the channel. That's why you need to subscribe to this channel, because I have a way of explaining it. Now, I'm not going to sit there and say this is the reason, but I'm going to explain to you that if this doesn't make sense, this is all the more reason why you can profit from when things don't make sense. Now, am I saying Target to buy? I have no idea. I haven't looked at Target at all. But to me, the idea that a company like Target, the beacon of the women of this country who love this store more than anything, falls 25% because they missed. Come on. Does that even make sense to you? You telling me Tesla hit a peak of $1,200 a share. It's now at $700. That's 40%, 45%. And you're telling me with their projections versus $1,200 a share versus now, they're actually projected to do better than they were at $1,200 if the stock is down. It tells me things are crazy. Now, do I think Tesla should go down more? Absolutely. It's not worth anywhere close to $700 a share, in my opinion. But it still tells me that people were irrationally exuberant about Tesla. So guys, be calm. Listen to your inner self when it says this doesn't make sense. Subscribe to our channel and watch more videos to explain that for you. Look at our community. We have our investment community. Oh, look, another message somebody sent me. We have 15 messages waiting for me. People are just asking me, hey, Paul, what do you think about today? And I'm going to tell them everything. I love today. For me, I like it when things go on sale. I like it when things go down. Is this the ultimate sale? No. I don't believe 5% is the buy the dip. I'm waiting for stocks to become cheaper. Does that mean I'm not loading up? I've bought some stocks today. Which ones? Not allowed to disclose that. But I've sold puts and bought some stocks today. High quality companies I think are selling at discounted prices. And guess what? I fully expect them to go lower. Don't care. If I buy a good company at a good price and it goes cheaper, I buy more. That's the idea behind it. The U.S. economy will grow, and 30 years from now, it'll, in all likelihood, be way bigger than it is today, and therefore the stock market, as long as you pay reasonable prices, will also be bigger 30 years from now than today. I just please encourage everybody, don't overreact. You look at this as an opportunity. I love seeing red days. They make me very happy, but I also have a short on the Nasdaq, which has done very, very well this year. It's up 20% or something like that. So I have a bias there. But I also have stocks that are falling, and I just keep buying good quality companies at good prices. That's all you should care about. Buy VOO, SPY if you're picking individual companies. Buy companies with good cash flow, good earnings potential, but most importantly, you're paying a reasonable multiple. That's what our software is here for. That's what our community is here for, to sit there and determine what is a reasonable multiple to pay for these companies. I cannot stress this enough, guys. You're in this for the long haul. Don't let the day-to-day iterations of the stock market up or down make you feel happy or sad. Yesterday, the market was up. I lost money. Guess what I did last night? I slept like a baby. Guess what I'm going to do like tonight? I'm going to sleep like a baby. It doesn't matter if the market went up 10% today and I lost a ton because I'm short the market, or the market went down 10% today and I made a ton. It does not matter. I sleep the same way because I've bought great quality companies at good prices, and that's what matters to me, and that should be your goal if you're buying individually. But more importantly, please dollar cost average. Don't worry about it. Every single month, VOO, SPY, do what you need to do for your retirement.